Imagine waking up one morning and finding an extra $1,300 in your bank account. Sounds too good to be true, right? Well, for thousands of Canadian retirees, this dream has become a reality. That's right, the Canada Pension Plan (CPP) has just announced a massive increase in monthly payouts, and it's a game changer for those relying on this vital income source. An extra $1,300 per month may not seem like a huge amount to some, but for retirees on a fixed income, it could mean the difference between barely scraping by and truly thriving in their golden years. Imagine being able to afford that dream vacation you've always wanted, or finally renovating your home to make it more comfortable and accessible. Or maybe you'll finally be able to spoil your grandkids a little more without worrying about the budget. Whatever your plans, the CPP Boost is a potential life changer, and in this video, we're going to dive deep into all the details. How did this increase come about? Who's eligible? When will you start seeing that extra money? And perhaps most importantly, what should you do with this newfound financial windfall? Stick around because by the end of this video, you'll have all the answers you need to make the most of this unprecedented opportunity. Hello everyone! Welcome back to another exciting episode of Seniors Money. My name is Michael, and I'm absolutely thrilled to have you here with me today. If you're new to the channel, let me give you a quick rundown. Seniors Money is dedicated to helping retirees and soon-to-be retirees navigate the often complex world of finance and retirement planning. We cover everything from CPP and old age security (OAS) to investment strategies, tax planning, estate planning, and more. Our goal is to empower you with the knowledge and tools you need to make informed decisions and live your golden years to the fullest, free from financial stress and worry. Now, I know retirement planning can sometimes feel overwhelming, with all the rules, regulations, and constantly changing landscape. But that's exactly why I started this channel, to break down these complex topics into easy-to-understand language and provide you with practical, actionable advice. And today's topic, the CPP increase, is a perfect example of why it's so important to stay informed and ahead of the curve when it comes to your retirement finances. This is a massive development that could potentially change the game for thousands of Canadian retirees, and you'll want to be prepared to take full advantage of it. CPP increase explained. So let's dive right into the heart of the matter. What exactly is this CPP increase all about? According to the latest reports from the federal government, retirees who receive the Canada Pension Plan will see a substantial hike in their monthly payouts, to the tune of an extra $1,300 per month. As long as you are currently receiving the CPP retirement pension, or will be receiving it in the near future, you qualify for the increase. It doesn't matter if you just started collecting your pension last year or if you've been receiving it for decades. The extra $1,300 per month will be added to your existing payout. As for the implementation timeline, the government has stated that the increase will be rolled out gradually over the next few months. Current estimates suggest that the first batch of retirees will see the extra funds in their accounts by August 2024, with the remaining recipients receiving their boosted payments by the end of the year. Now, I know what you're thinking. August 2024. That's still quite a ways away. And you're absolutely right. But fear not, my friends, because the increase will be retroactive. That means that even if you don't receive your first boosted payment until later in the year, you'll still get the full amount dating back to the initial implementation date. So, let's say your first increased payment arrives in October 2024. You'll not only receive the regular October payment with the $1,300 increase, but you'll also get a lump sum covering the missed increased amounts from August and September. It's like getting a nice little bonus on top of your already higher monthly income. Impact on retirement planning and lifestyle. All right, now that we've covered the nuts and bolts of the CPP increase, let's talk about the real-world impact this could have on your retirement planning and overall lifestyle. And let me just say, the implications are huge. For current retirees, this extra $1,300 per month could be an absolute game changer. Suddenly, that tight budget you've been living on gets a whole lot more breathing room. Maybe you'll finally be able to afford that much-needed home renovation or vehicle upgrade you've been putting off. Or perhaps you'll splurge a little and treat yourself to some luxuries you've been denying yourself, like more frequent dining out or trips to visit family and friends. But beyond just material possessions, this CPP increase could also provide a significant boost to your overall quality of life and peace of mind. Imagine being able to pay off any lingering debts or outstanding bills, freeing up even more of your monthly income for leisure and enjoyment. Or maybe you'll finally be able to stop worrying about making ends meet each month and start truly embracing and savoring your retirement years. For those of you who are still working and saving for retirement, the impact is just as profound. With the prospect of higher monthly payouts from the CPP, you may need to adjust your overall retirement savings strategy. Perhaps you can scale back your contributions to other retirement vehicles like RSPs or TFSAs, knowing that the CPP increase will provide a more substantial base income. Estate planning. The CPP increase may also have implications for your estate planning strategies. If you have beneficiaries or dependents who stand to inherit your assets, it's essential to review your will, powers of attorney, and other estate documents to ensure they align with your updated financial situation. You may want to consider adjusting the distribution of your assets or making provisions for any excess income you may accumulate as a result of the CPP boost. Additionally, if you've got charitable intentions, you could explore options for donating a portion of your increased CPP income to causes that are meaningful to you. Investment strategies. For those still in the accumulation phase of retirement planning, the CPP increase may prompt a reevaluation of your investment strategies. With the prospect of higher monthly income from CPP in retirement, you may be able to adjust your asset allocation to a more conservative or income-focused approach. Conversely, if you plan to maintain your current savings rates, you may want to explore more aggressive growth strategies to maximize the potential of your investment portfolio. In either case, it's highly recommended to consult with a qualified financial advisor or portfolio manager to ensure your investment strategies align with your updated retirement goals and risk tolerance. Long-term care planning. As we age, the likelihood of requiring long-term care services increases. With the additional income from the CPP increase, you may want to explore options for securing long-term care insurance or setting aside funds specifically for potential future care needs. This proactive approach can provide peace of mind and help ensure that you have access to quality care should the need arise, without depleting your retirement savings or burdening loved ones. Inflation and cost of living. While an extra $1,300 per month may seem like a substantial amount today, it's important to consider the potential impact of inflation and rising costs of living over time. As prices for essential goods and services increase, the purchasing power of your CPP income could diminish. To combat this, you may want to explore inflation-protected investment vehicles, or consider adjusting your budget and spending habits to account for potential future cost increases. Regularly reviewing and updating your financial plan can help ensure you stay ahead of inflationary pressures. Testimonials and success stories. To illustrate the real-world impact of the CPP increase, let's hear from some of our viewers who have already experienced the benefits. I never imagined that my CPP payments would increase so dramatically. This extra income has been a lifesaver, allowing me to cover my medical expenses without dipping into my savings. I can finally afford the medications and treatments I need to manage my chronic conditions without constantly worrying about the cost. Jane, 72, Toronto. With the CPP boost, my wife and I can finally take that dream vacation to Europe we've been putting off for years. We've always wanted to explore the historic cities and stunning landscapes, but the cost was just too prohibitive on our fixed income. Now we can make those travel dreams a reality and create lasting memories together. Robert, 68, Vancouver. As a single retiree, the additional CPP income has given me the financial security I've been craving. I no longer have to worry about making ends meet each month, and I can even afford to treat myself to little luxuries like a daily coffee or a new book without feeling guilty. It's such a weight off my shoulders. Sarah, 66, Halifax. My husband and I were always diligent savers, but the CPP increase has allowed us to breathe a little easier. We decided to use a portion of the extra income to pay off our remaining mortgage balance, freeing up even more cash flow for travel, hobbies, and spoiling our grandkids rotten. Linda and James, 70 and 72, Calgary. These heartwarming stories are just a glimpse into the transformative power of the CPP increase, and we're excited to hear more from our viewers as the rollout continues. To provide a well-rounded perspective on this topic, we've invited a panel of experts to share their insights and advice. Our guests today include Jane Smith, Certified Financial Planner, CFP, and author of Retirement Reimagined; David Johnson, economist and professor of finance at the University of Toronto; Sarah Lee, Certified Public Accountant, CPA, and tax specialist. Throughout the video, our experts will weigh in on various aspects of the CPP increase, offering valuable tips and strategies to help you maximize the benefits and navigate any potential challenges. Jane Smith, CFP. The CPP increase is an incredible opportunity for retirees to enhance their quality of life and achieve greater financial security. However, it's crucial to approach this windfall strategically and with a long-term perspective. My advice would be to first address any outstanding debts or high-interest obligations, as this will free up more of your income for discretionary spending or savings. Next, review your budget and ensure you're accounting for essential expenses like housing, healthcare, and transportation. Any remaining funds could then be allocated towards travel, hobbies, or other lifestyle enhancements. Additionally, I would strongly encourage consulting with a financial advisor or tax professional to understand the potential tax implications and explore strategies to minimize your tax burden. With proper planning, this CPP increase could be truly life-changing. David Johnson, economist. From an economic standpoint, the CPP increase is a fascinating development that could have far-reaching implications for consumer spending, inflation, and overall economic growth. With thousands of retirees suddenly receiving a substantial boost to their disposable income, we could see a surge in demand for certain goods and services, particularly in sectors like travel, leisure, and luxury retail. However, it's important to note that this influx of cash could also contribute to inflationary pressures, potentially eroding some of the purchasing power gains for retirees. It will be crucial for policymakers and financial institutions to closely monitor these economic trends and make adjustments as needed to maintain stability and affordability. Ultimately, the true impact of the CPP increase will depend on how retirees choose to allocate and utilize these additional funds. Responsible financial planning and prudent spending habits will be key to maximizing the benefits of this windfall. Sarah Lee, CPA. As a tax specialist, my primary concern with the CPP increase is ensuring that retirees are aware of the potential tax implications and taking steps to minimize their overall tax burden. While an extra $1,300 per month is certainly a substantial amount, it's important to remember that this income is fully taxable at your marginal tax rate. Depending on your overall income level and tax bracket, a significant portion of that CPP increase could be eaten up by higher tax obligations. However, there are various strategies and deductions that can help mitigate this impact. For example, income splitting with a lower-income spouse or partner, maximizing contributions to tax-advantaged accounts like TFSAs, and taking advantage of age-related tax credits can all help reduce your taxable income and keep more of that CPP boost in your pocket. Additionally, if you have other sources of taxable income, such as investments or rental properties, it's crucial to carefully manage those to avoid unnecessarily high tax rates. Proactive tax planning and ongoing consultation with a qualified tax professional can make a huge difference in maximizing the benefits of this CPP increase. These expert insights provide valuable context and guidance as you navigate the intricacies of the CPP boost. Their diverse perspectives highlight the multifaceted nature of this development and the importance of taking a holistic approach to your financial planning. Additionally, if you have any specific questions, personal experiences, or insights to share, please leave them in the comments section below. We value your input and aim to create a vibrant community where we can learn from one another and support each other on this journey towards a secure and prosperous retirement. I also encourage you to share this video with any friends or loved ones who may benefit from this information. The more we can spread awareness about this CPP increase and the importance of proactive financial planning, the better equipped our community will be to navigate these changes and make the most of this unprecedented opportunity. Thank you for joining me on this exciting journey. Until next time, stay informed, stay motivated, and enjoy your retirement to the fullest.